As an investor, having access to the right information and tools can be a game changer in terms of your chances of success. One of the most effective tools that is simple to use is MarketSmith's relative strength rating, also known as price strength rating. This rating measures a stock's strength compared to the entire universe of listed companies. If a stock has an RS rating of 99, it indicates that over the past year it has outperformed 99% of the companies in MarketSmith's database. This technical tool is one of the most popular ways for investors to see the market's top performers. The relative strength rating is the result of calculating a stock's percentage price change over the last 12 months. A 40% weight is assigned to the latest 3-month period. The remaining 3 quarters each receive 20% weight. All stocks are arranged in order of greatest price percentage change and assigned a percentile rank from 99 to 1, where 99 is the best and 1 is the worst rating. The RS rating is a valuable tool to use when considering breakouts. Growth stocks with RS ratings below 80 generally aren't showing the kind of market outperformance that you want to see at the point of a breakout. If the RS rating is lower, there could be better stocks out there. Some investors may shy away from higher RS ratings, thinking that these stocks are already too high. However, many leading stocks have RS ratings above 80 as they are still recovering and trying to make new highs. Once you're on MarketSmith's evaluation page, you'll notice the price strength rating on top of a chart. The rating that we show here is a number rating. A rating of 90 means that the stock falls in top 10% of all the stocks in terms of earnings growth. As a growth investor, you would like to focus on stocks that are in top 10% or 20% of the stocks. Anything below that requires a careful study of the stock. If you come down to the summary section, you can see the price strength rating here as well. It's also important to keep an eye on the relative strength line, which compares a stock's price performance to that of the Nifty 50. An upward trending RS line tells you the stock is outperforming the general market. And when the line is in or near new high ground at the time of a breakout, it's a bullish sign. Did you notice the difference between the RS rating and RS line? The RS rating or price strength rating compares the stock's price performance with all other listed stocks in India, while the RS line compares the stock's price performance with the general market index, that is Nifty 50. By using MarketSmith's RS rating along with the relative strength line and other key metrics, you can gain a better understanding of a stock's potential for success. Remember to make sure that the market is in a confirmed uptrend and wait for the stock to clear a buy point in strong volume before making any investment decisions. Now, is there an easy way to find out the stocks with higher RS rating? The answer is yes. You can visit the Idealist page and click on the list named Highest EPS and Relative Strength under MarketSmith Stock Screens section. This list features companies with the highest combined relative strength rating and earnings per share rating. A special screen is used to eliminate most stocks that are extended in price. Another list you can visit is New High in RS line after 4-year decline. This list features companies with the greatest 4-year price decline and the relative strength line at a 1-year high. The stocks with large price declines in the last 4 years that begin to outperform the market may be undergoing a change which could lead to price appreciation. Remember, these lists are not a buy or sell recommendation. We are using our rigorous criteria to cut the noise and bring the very best stocks to you so that you can cut through the noise in a time-efficient manner. But you still have to do your own research and due diligence.